Uh, Good evening, friends, and let me share with you a live demo that what is this all report, what is this report all about, and how to use this report vis-a-vis the features of the report which we are going to discuss here. Friends, as we explained that based on the GST data, we have prepared the various reports. Some of them reports are do not require the OTP from the borrower, but the majority of the reports required a permission in the shape of a OTP from the customer. As we discussed in the bank that the primary purpose is to review, having a detailed review of the SSC. That's why there will be a OTP report which is going to be implement and integrate into the banking system. Now, my dear friends, if you will see the 5 different type of reports, the primary report which we are going to discuss here today is about the GST Fitness Report based on the GST number, and then there is another report which is very important for all of you, that is the GST report based on the PAN number. Meaning thereby the difference between that in case you are generating the report based on the PAN number, then within one PAN number, if the 10 GST numbers are there, then not only it will give the 10 reports, but also it will give a consolidated report also, so that you will not require to do a consolidation. So you will get all the 10 different reports plus the consolidated report of a borrower, so that immediately you will get entire data, and then you can analyze and see that whether you have to go ahead with the credit exposure to that borrower or not. But in case there is only a single GST number within that PAN number, meaning thereby if the borrower is having only one GST number, in that case you can use this report number 2 as well, which is based on the GSTN. So there is no difference between the two different reports. The only difference, as I mentioned you, that it will be there for the multiple GST number and it will be there for the single GST number. And this report, the MSME scan report, is primarily designed to see, because my dear friend, when I am going to discuss you this report will be of 17 pages, 20 pages, 30 pages. It will be very difficult for you even to read the entire report within few seconds, and then it is not a machine readable report. You have to do a manual analysis. But since there are the certain products in the banks are there which are completely digital, you want to give a loan in 2 minutes time or a 3 minutes time based on the GST compliance, then we have developed a small report, the MSME scan report, which not only give the parameters but also give a scoring system like a CIBIL score, that you will have a out of 100 how much score is there, and based on the minimum score requirement you can decide whether you want to go ahead with this kind of a loan or not, the exposure or not. So my dear friend, these are the GST based detailed analysis which I just shared with you, that the reports which are available for you on your login ID. As I explained you earlier, that there is a login ID, you have to punch your login ID, username and password into the website, and then immediately you will get a different drop down menu, that which report you want to generate, and then based on the GST number, financial year, immediately you will get the report. Now what kind of a report you will get, if you want to see that okay, what kind of a report you are going to get from this discussion, I will explain you a report as well. Now my dear friend, if I will go to the report, give me a second, I am just opening the report for the benefit of each one of you. So my dear friend, I was mentioning you, so I am giving you a demo of a live report, that how report came. So after doing some processing, this report is there before me. Now let us understand how to read this report. So my dear friend, first of all, when you will see this report, you will get some basic data of the borrower. You will get that what is the legal name of the borrower, what is the trade name, for example some private limited is there or some LLP or partnership firm is there. So in this case it is a proprietorship firm. When it was registered, so vintage will be available to you. When it was registered with the GST department, the registration is active or not, what nature of business is there, whether it is a composite supplier or a regular supplier, and then the address vis-a-vis the slab of the turnover, then the other details like email ID and phone number, and where it is registered with the GST department. All these basic details will be available to you on a single page, so that you can see whether I have to go ahead with that or not, and the borrower is the actual person for whom you are studying that whether you have to go ahead with this or not. Now my dear friend, after this there will be a basic index which is there, and how to read the report will be there. Now after this you will get a first type of report, which will be a compliance scoring report. My dear friend, as you are aware that every month we have to file the two returns, one GSTR 1 and one 3B. Now we evaluated that we have given 1 marks for every return which is filed on time. So 12 months 12 points in case it is being filed on time, but if it is filed delayed, then there will be a half a point deduction will be there. Likewise GSTR 1B 12 points. For active registration or suspended registration there is a 5 points, and for GSTR 9 which is the annual return, again there is only 1 point. So the total score which is available, the maximum score is 30. Now here you will find that this gentleman, the score is 11, meaning thereby there is a there is one return which was not filed or the two returns which are delayed. Likewise the score obtained by the GSTR 3B is only 6, meaning thereby every month there is a delay filing of return. So you have to ask the borrower that why there is always a delay in filing of your GSTR 3B. Likewise the registration is active and the annual return is being filed, but still his score is 23 out of 30, meaning thereby it is the compliance level is 76%. Whether it is right or not, you have to decide based on your own parameter. Now my dear friend, as I discussed with you that the GSTR 3B was always filed belatedly, delayed. Now you can see that the 20th May return was filed 4 days delay, and gradually this delay is increasing, and now the month of 20th April 2025 return was filed 44 days delayed on the 3rd of June, and then the two returns are there, GSTR 1 as well, which are being filed belatedly delayed. So meaning thereby, my dear friend, there is a common phenomena of this assessee, the borrower, that he is filing the GSTR 3B always delayed, meaning thereby the payment of tax is always delayed. There is always a lag, which was the due date vis-a-vis the actual date when the tax was paid. So there is a delay in payment of tax. In case of a simple words, I will say that there is a delay in payment of tax for this assessee. Now coming to the second parameter, which is a sale and purchase. So here I just wish to clarify you that the first point we discussed, that this person, that nature of the activity of this person, which we discussed in the first slide, was that he is into the retail business, into the wholesale business kind of activity which he declared. Now if we will go ahead, we will find that for this retail business, the breakup of the turnover is that for the last 3 years his sale and purchase has been given. Now you will find that the first year sale, the 2023 sales was 7 crore 55 lakhs, against which the purchases were more than the sale, meaning thereby either it should be a closing stock, or there is no margin at all because you are buying more than the selling. Similarly, the second year the sales is 5 crore 98 lakhs, sale is 6 crore 48 lakhs. Again there is a more purchase as compared to the sale, and even in the third year also that gap is very minimum, meaning thereby the sale is 9 crore 7 lakh, purchase is 8 crore 49 lakh. So if you will compare these 3 years, the one phenomena which you will be able to gather, that the margins are practically, there is no margin at all. So there is a practically sale and purchase or the similar value, or even the purchases are more than that. So practically how the person will be able to serve the principal and the interest is the question that should come in your mind. When you have no margin, how you will be able to serve my principal and interest, how you will be able to repay my loan? This is the question you should ask by having this kind of a input-output ratio. Then my dear friend, you want to see that, okay, I want to see the breakup of the sale. So we have given the breakup of the sale also. So the sale, for example, was the sale was 4 crore out of this total sale of which was there in your screen. Say for example, the sale for 9 crore 7 lakh was there. So what is the breakup of 9 crore 7 lakh, which is also being given here? That there was a B2B sale, B2C sale, there was export, and the exempted supply was there. So you will be aware that, okay, how much he is dealing with the business person and how much he is doing a retail sale. So that is available to you. And now my dear friend, it is also being given that where he is selling. So which state the main operations are there. Here you will find that the Manipur operations are practically 9 crore 6 lakhs out of 9 crore 7 lakh, and the Mizoram sale is only 82,000. So you will get this kind of a breakup as well. Now my dear friend, the very important breakup which will be available to you is about the HSN classification, meaning thereby which kind of activity he is doing. So he mentioned that I am doing a retail sale and retail and wholesale. But what is the product? So now to ascertain whether the business is coming from the commission income or from actual business or from restaurant business or from a guest house or whatever the business is there, we have to understand that which nature of business he is into. So my dear friend, you will find that he is practically, you will see that we have given HSN based. So HSN based classification means product based classification, where you will find that these certain products are being sold for 11 lakhs rupees at the rate of 28%, which are other cement product. Now you will find that later on the 51 lakhs is also there, which is again a cement of a different type. Then you will find all this is the complete breakup which is available for the entire sale activity he is doing. And you will find that the majority of the activity which are either the cement sale or the iron ore. So you will find that practically the 90% of the turnover classifies into the cement or the iron ore, and where the margin, so you can see the 1 crore 70 lakhs is a flat rolled product of iron or the non-alloy steel of a width of 600 mm. So you are aware that okay, what kind of a sale he is doing on the year-to-year basis. So this is not only giving for 1 year, this is giving for all the 3 years, that what kind of activity is there. So he is into practically the cement or iron. So you can see that he is actually the retailer or the wholesaler of iron products or the cement products. So basically the construction industry. So he is the retailer or the wholesaler of a construction sector, that you can conclude with this kind of a classification which is available to you. Then my dear friend, the very important point which will be there in the next case, I will go to all this after the classification you will find that, because certain guys are giving a lot of classification and certain other not. So this is our executive summary. It's a very important summary, my dear friends. As you are aware that the reports will vary from 20 pages to 80 pages. Now how you will be able to read the entire report? So that's why, based on the recommendation received from the various our users, one of the user mentioned that you should give us executive summary. So this is the executive summary of the entire report, where we have given the key red flags or the key important points. Here you will find that this gentleman, there is no difference between the GSTR 1 and 3B, meaning thereby the sales return and the tax payment, there is no mismatch. Again, the credit notes are not there. But very important, which you should note down here in this particular report, that the ITC, the total liability of the GST, out of the total liability of the GST, 98% tax was paid through the ITC, meaning thereby the cash deposit is very minimal. The entire amount is coming from the ITC, meaning thereby again this will reflect that there is a very thin margin. There is only a thin margin of 1.6268%, meaning thereby you have to ask again that question which was I raised earlier, that from where you will be able to serve the principal and the interest. Because you are, say for example, I am buying for 98 rupees, I am selling for 100 rupees. There will be a margin of 2%, total turnover is 10 crore, meaning thereby the total gross margin will be 20 lakhs only. And I have a salary expenses, I have the other expenses. So how I will be able to serve the principal and interest? This is something coming out as a predictive analysis that you have to ask. Similarly, there is an excess credit which was being claimed. So there was ineligible credit which is getting reflected of 17 lakhs, meaning thereby the guy will receive a notice from the department for reversal of the 17 lakhs plus interest plus penalty in all the probabilities, and then one has to explain. And similarly, the invoices which are fake. So there will be allegation. For example, your borrower is there and he is buying some goods from the market. Now the supplier vanished. So in that case, as per the GST law, in that case your borrower has to reverse the credit along with the interest and penalty, meaning thereby whatever the amount will come here, the one has to reverse along with the interest and penalty. So if the amount is, say for example 54,000 is a very minimum amount, but in some reports you will find that 2 crore, 1 crore is the amount which is coming, meaning thereby if the value is 2 crore here, the 2 crore plus interest plus penalty will be the notice which is going to be issued by the GST department to this particular assessee. So if your exposure is say for 2 crore only, but his liability to the GST department is 5 crore, you can understand that how the money will be used, taken from the bank for the liability towards the GST rather than using for the business. So that is something that you have to importantly note down while you are reviewing the credit proposal. Then my dear friend,
the summary which I explained you, now I am going to explain you in detail. So here the GSTR1 is the sales return and GSTR3B is the tax payment return. So you will find the liability in the GSTR1, meaning thereby sales return was 1 crore 66 lakhs and the payment was also made 1 crore 66 lakhs. So there is no mismatch, it's good. Otherwise, if there is a mismatch, meaning thereby if the 1 is more, 3B is less, then there will be a liability on the SSC. So you have to see that the 3B should be always equal or more than the 1. Then only the SSC has no liability. Then my dear friend, the credit notes, it is important in case of a bill discounting or the factoring business. If more the credit notes are there, then you have to have a question. Why there are so many credit notes are there in this particular case? By chance, in this case, there is no credit note, so it's good that there is no credit note being issued. Then my dear friend, coming to the another one, that these are the top buyers. So this guy will have the top buyers and you will see that out of the top buyers, practically the 70% of the purchases are coming from these 5 guys. So his main buyers are these 5. So you have to see whether they are the related party or not, what kind of a business engagements are there with them. So this is something that gives you the helicopter view that who are the top buyers. And in case there is any related party, then that will also be coming here. Then my dear friend, this is the sales register. So you will find that all the parties which are prominent parties, their names are there and rest of the parties are being classified as other. So practically this is the complete sales register of this gentleman from April 24 to March 25 monthly, and these are the various purchase sales which are being made. Now my dear friend, likewise then there is a GST liability. As I explained you, the total liability was 1 crore 68 lakhs. The tax paid of from ITC was 1 crore 66 lakhs and cash paid was only 2.83 lakhs. So you can see, as I explained you, that this is a very, I will say, the cautious kind of a situation. Normally, if you ask me that what will be the margin, so in case of a trading, the margin should be around 10 to 15%. In case of a manufacturing, it will be even more than, because you have a labor expenses. And in case of a service industry, the margin even will be more than 40-50%. So my dear friend, it's very important for all of us to understand that, for example, I am selling for 100 rupees. 10% will be my profit margin or 5% will be my profit margin, 10% will be my salary cost. So in any case, my purchases should not be more than 70%, 75%. The rest should be either the non-GST expenditure or my profit margin. But here in this case, the 98.32% is my purchases, which is actually required the attention of the analyzer, the credit manager, that who is reviewing the proposal. Then my dear friend, as I mentioned you, the ineligible credit, the total credit, the 2B, here the 2B reflects the credit coming from the GST department and 3B means the credit taken. So here you will find the total credit taken was 1 crore 72 lakhs, whereas it is coming from the department, one GSTR 2B that is coming from the GST department is 1 crore 54 lakhs, meaning thereby there is a mismatch of 17 lakhs, the extra credit which is being claimed. Now one has to explain why this extra credit has been claimed, otherwise there will be a liability of 17 lakhs plus interest plus penalty will be there. Then my dear friend, it's very important that I mentioned you the suspended dealer, the cancelled dealer liability, the fake invoice allegation. Now here I mentioned you that I discussed about a figure of 54,000. From whom it was? So in the B2 report, it is showing that these are the 4 suppliers from whom he purchased something and their registration got cancelled and the purchase value is this much, meaning thereby that there will be a GST liability on this person for the reversal when the supplier, the borrower's supplier, registration got cancelled or suspended, then they have to pay back along with the interest and penalty. Whom they are, it is being given. Likewise, my dear friend, then there is a circular trading. So you will find that there are the guys here by chance, there is a very small volume of a circular trading, but many cases you will find that somebody is buying from a same person, somebody is selling to the same person. So meaning thereby it is only a circular trading to inflate the turnover, and that's a very important point our bankers should be aware of, so that you can see that what exactly the turnover is, actual turnover is, then only basis of that you should decide the credit exposure you should have. Then my dear friend, coming to the another one, it is the main buyers, main suppliers to the borrower from whom he is buying, and again you will find that when he was selling, it was 70% selling to 5 guys. Likewise, it is when you are talking about the purchase, again it is the 70% purchase from the top 8 buyers, top 8 suppliers. So that is something that will be aware to you. Similarly, the related party, and finally the purchase register will be there to you. So this is the purchase register of the gentleman, the borrower, and finally the 3-year sale purchase. My dear friend, here I wish to draw your attention. Again, you will find that many borrowers are there who are showing their turnover only in the month of Feb and March. That shows that there is no consistency. It is only in the Feb and March suddenly the turnover will jump, and then somebody will come to you that okay, I need the more and more funds. Here the similar case is there, that normally the turnover is 12 lakhs, 17 lakhs, 84 lakhs, or 44 lakhs. But suddenly in the month of Feb, the turnover increased to 1 crore 24 lakhs, and in the March it is going to 2 crore 2 lakhs. Next year, for example, now this is the Feb and March. Normal turnover is around in 30-40 lakhs, but suddenly it is 2 crore. If you will see the next year is same. Normal turnover is 9 lakhs, 10 lakhs, 4 lakhs, 1 lakh, 40 lakhs, 18 lakhs, but suddenly in the month of March it is 2 crore 10 lakh. Likewise, in the next year, normal turnover is 18 lakhs, 22 lakhs, but suddenly it increased to 1 crore 8 lakhs out of the 7.55. So practically you will find that the 20% of the 30% turnover is coming only in a month of March, and the rest of the 11 months it is composing only the 70% turnover. That shows that okay, there should be a more rigorous review is required at the level of the bankers. So my dear friend, this was all. That this is the way that how to read the report as I explained you, because we received certain queries that okay, we need more and more participation, that how to read this report. That's why we recorded this video for the benefit of our stakeholders. If you will generate the PAN based report, so what is going to happen, that say for example this report was having the one PAN number. So this report carry the one PAN number. I am going on the top of the report. You will find that okay, this report carry only the one PAN number. Now this one GST. But in case this report is a PAN based, in that case this report will give first the consolidated report of all the GST number, and then individual report like this only for all the GST number. So that you, if you want to, for example, you are reviewing only the Manipur rather than the national level, then you have a Manipur report also. But in case you want to see the Manipur, Mizoram and other together, then you will get the data of Mizoram, Manipur, Uttar Pradesh, Madhya Pradesh separately as well as a consolidated report. So that's the way you have to study. So my dear friend, this was all from my side. I believe that you are aware that how to generate the report, but very soon we will record a separate video that how to generate the report, and will share with you so that you can get the more easiness as far as the generation of the report process as well.